Hey guys, how's it going? As you can see by the title, I'm going to be talking today about how to find the best day trade setups, right? You might come into the market and make a trade and it goes very well, and you make money, let's say, but was it a good trade? Do you know how to identify whether it was actually a good trade or if you just got lucky, okay? So I'm going to talk today about how to actually recognize good day trading setups and how to execute them to perfection to minimize your risk, minimize the emotion of the trade, and to overall increase your odds over time. Okay. So one of the first things that you're going to want to do is make sure you know the current market conditions. That's general knowledge. You need to know what the market is doing. At the time of making this video, the market, here's the S&P 500, is in a strong uptrend, right? We are going up. And so during a period of low volatility, uptrending, you want to focus on stocks that are relatively strong, that are leading the market. So as we can see here, there was a resistance around here. And once the market broke out of that, it's back into a trending state. And we can go into all the breakouts and stuff, but we're not going to get into it. Realize the market's in a trending state. Stocks are going up. So we want to focus on stocks that are leading the market to the upside, that are making new all-time highs, that are breaking out of resistance trend lines, breaking out of resistance levels, right? So I'm not going to go into all the technical analysis. But here, for example, Apple is one market leader. AMD has been a good market leader. BABA, we can see, broke out of a kind of trend line from here, these highs to this high to this high, and boom, broke out of that trend line, and then broke out of this one, and look at it go, right? We want to focus on stocks like this because they're very one-sided movement, and it's much easier to make money, right? When you look at something like, let's just go to Roku. Look at Roku right now. It's a mess. It's an equal number of buyers and sellers. It's getting closer and closer, which creates a triangle on the chart. And this is something we don't want to play because it's not trending, right? When we had a resistance here and all of a sudden it was broken, now Roku is in a trending state. And then you can see it begins to consolidate, breaks, now it's trending. Here it's trending, now it's consolidating again. We don't want to play something like this. When the market's trending, focus on stocks that are trending with the market. And a few things you can do is look at different ETFs for the market, right? Look at, for example, the XLF financials. Look at the XLC communication, XLK technology. You can look these up, find out which ones are breaking out at the moment, and then go look at stocks in that sector and find what's also breaking out, what's leading that actual sector. Focus on playing those stocks, okay? So with that being said, that's kind of step number one. That's the initial analysis you need to do. Now I'm going to go back to this Apple chart. Now, you need to start with a daily chart. Even though you're day trading, you might be using a 5-minute chart, 10, 15. Don't use a 1-minute chart. That's my number one rule of trading. Never use a 1-minute chart. That's just, it's not made for trading. It's not good for trading. Causes too much emotion, too much back and forth. Don't do it. So start with a daily chart and, just do some simple technical analysis. If you're brand new, go watch some of my technical analysis videos. I'm not going to get into it. But as you can see here, I have a couple trend lines. And so I knew Apple was bullish. And so I saw it create a resistance right here around the 268 mark. And so I began drawing trend lines. And when I saw it bottomed here and came back up, and when I actually made these trend lines was, I think, around this period here. So what I saw was Apple was doing what's called a high base, is where a stock will come up and usually break through a resistance, which you can see was right here. There was a resistance. Apple broke through on this day and then it was high basing. It was essentially going sideways right above that resistance level. This is a very strong pattern, especially when it's on a daily chart, hourly chart, but daily chart especially. It's a very, very strong pattern that stock is likely going to continue its move. So when I saw this, I actually marked it with this range, right? And how I do this is I mark you can either do it from the close of the initial candle, or you can move this up to the high of the initial candle. Some people do it different ways. And essentially, you want to wait for a daily break and close above that level. Now, this gives me a high chance, a high probability of success because I'm playing a stock that is leading the market. I've found a setup, such as a high base. If we go down to a smaller chart here, you can see the trend line I had drawn as well. And if you didn't want to enter yet because it hadn't broken the trend line here, that's totally fine. What you'd want to do is wait for a smaller time frame, like an hourly or 2 hour perhaps, to break over that trend line. And then as it comes down back to that trend line, that's your entry. And your stop loss in this case can be back below this breakout area, this rectangle or trend line. If it starts to close hourly below here, the breakout has likely failed, and it's likely going to go back to the bottom of the range, or perhaps to this support, and you want to get out before you take a bigger hit. As we can see, this actually turned into maybe a short swing, maybe a one-day swing, and you take your profits. Maybe you hold one more. That's another key thing, guys. Take profits in stages. If you enter at the trend line, in this case, it comes down. You enter at the trend line. You want to make sure once it comes back up to this resistance here that you're exiting part of your position, right? That's another key to making sure that you have the highest success rate, is that you're taking partial profits along the way. You're not holding and saying, oh, you know what, I think I know Apple's going to go to 300 in the next week. I think it's just going to go parabolic. I'm so confident in it, right? You don't know what's going to happen. I don't know what's going to happen. Nobody in the entire world knows where Apple's going to stop. So what you have to do as a trader is put the probabilities in your favor, and you need to book profits when they're given to you while keeping some of your position to maximize profits. But while you do this, you're also lowering your risk, okay? Especially if you're using options and they're time decayed, you have to take profits even at minor levels because you never know if it goes back down and goes sideways for a bit, for a day or two, and you have an option expiring soon. Your premium may be all burned out by the time that it actually makes its move, okay? So either buy something that's further out so you can swing it, or make sure you're taking partial profits, okay? So that's one example of a good setup, a high base setup, right? And I want to walk you through this one as well on Apple. It's essentially the same. It's a high base setup. And what I noticed is that it was actually, it had an up move. And typically when a stock makes an up move like this, it will actually come back down and retest at least this opening range low. So the low of this candle, maybe even fill the gap and bounce up. Now in this case, on Apple, I noticed that for a couple days, it actually wasn't even trying or could not get close to the opening range low. Excuse me. And when you see that, that's bullish behavior. Why? Because if sellers were strong, it would show by at least testing that low. But when price is not even getting halfway down, barely halfway down this up move, that's showing you that buyers are stepping in at higher and higher and higher prices, and they're likely going to push that through the top. They're likely going to break out again. And another very bullish thing, another thing that tells that the next move could be very large, I should say, is how long this move, this consolidation lasted for. This lasted for 1, 2, 3, 4, 5, and it broke out on the 6th day. And because it was consolidating so long, multiple days of consolidation in a tight range usually leads to multiple days of breaking out. That's why I like to say look at daily charts, look at hourly charts. The moves will usually be much more magnified when the consolidation lasts longer. And so in this case, on the breakout, how you would want to trade this, you want to be very careful here to watch candle closes. And as you can see on this day, Apple actually opened above the range, but it came down and closed back below. Like I said earlier, when that happens, typically it will go down and test the bottom of the range again, or at least fill this gap and perhaps bounce. So it did go test the bottom of the range. It closed the day well, and it opened the next day a little bit higher. And I noticed this, and you want to be watching the market at the time too. Is it breaking out? Is it gapping up? Kind of all gives you a hint as to whether the trade is going to be good. But regardless, as we look at Apple in this case, there's an hourly break and a close above the range. And you want to make sure you don't move your range up to this candle. Always keep, whenever something's flagging, you want to keep it at the first day, right? The first day, the candle close, right? So there's a candle close here. There's a breakout candle close here. So the top of your range should be somewhere around the high of the initial come up, right? You spike up, you hit resistance, and that's the top of your range. Any fake breakouts afterwards, you don't want to move your range higher because that's not the true range. That's just a fake breakout. And right here, you can see it didn't break above that, but I still consider it a breakout because it broke above the initial resistance after Apple first came up. All right, so keep that in mind. And so how would you play this? You'd perhaps enter after the hourly close above range. You might want to enter a partial position in case it comes back down to test the range. That's where you could enter a full position. And then as you can see, it comes up, maybe take some partial profits. Later in the day, you can see it stalls out here. IV starts to die down. Take some partial profits. If you want to continue swinging, you can. Why? Because it's a multi-day breakout, right? Many days of consolidation usually leads to many days of rallying, of trending. So in this case, it would be okay to swing. And as you're managing the trade, you always want to keep an eye on gaps, like I talk about in many of my videos. And you want to watch these longer time frames, guys. So hourly, you can see on this day here, Christmas Eve, it's pretty low volume. It actually came down. How many people do you think got out of Apple down here? How many people do you think got scared that might have been holding calls or even just holding stock? And if they're doing a short-term trade on it, they might have got scared and sold. Watch these longer time frames. Apple came up and closed the hour above this gap, and that's a long bottom wick. That's another bullish sign. That could even be another bullish entry there. And as you can see, I marked the range of when it first came up and found resistance and rejected. We closed above that range, messed around with it for a bit, closed the day above range. Sure enough, here we go. Here's another big rally. Multi-day consolidation leads to multi-day rallies. Okay. You want to make sure that you are trading something that is currently breaking out of a consolidation. That's giving you some sort of confirmation somewhere you know that you're wrong. If it comes back down and fails the breakout, you have to know where you're wrong because they're not always going to work out. But if you follow market leaders, whether it's a downtrend or uptrend, follow the stocks that are leading the market, look at the different indices, and find out what's going with the market, whether it's to the upside or downside, and focus on specific stocks in those indices. One last example. I want to show you guys. Sorry, I'm actually not going to use AMD. I'm going to use not DG. I'm sorry. What was the Goldman Sachs? Goldman Sachs. This was it. This was a trade we had today. So this is what I like to call a flag breakout, right? And so this is a case where it actually opened above the flag, right? And so watch my trendline video if you haven't. You always want to draw from the candle closes, close to close. Don't use the wicks. Wicks, they don't work as well. Go and try it, back test it. I guarantee you this will change your life. Anyways, I saw Goldman Sachs open above the trend line, and I was a little hesitant at first because it hadn't closed an hour yet. But here's how I approached this trade. I was watching a smaller time frame, I think of 15-minute. And what led me to enter the trade was the initial down move here, and look at that bounce off the trend line into a very, very strong closing candle. And we can also notice that it didn't come near the gap. It did come near it. It didn't fill it all the way, which is again a sign that buyers are stepping in earlier than an important level. And so that's showing bullish sentiment. And I saw, well, this is a pretty good risk to reward if I can get on the downside. This was my first target, which was essentially just this, top resistance up here that it had recently come to a few days ago. And this is usually a sign when it's sideways to down like this, with a very nice flag trend line, that the stock is wanting to push through this resistance. So I'm actually still in part of this position. I'm swinging. But this could also just be a day trade up to the top. You don't have to swing. I like to enter and then take some partial profit here. And if it still looks fine at the end of the day, I'll swing some. Because this is likely leading to a much bigger move, guys. And what you have to realize with this is these can turn huge, huge profits. These are some of the biggest profit trades. I'm turning hundreds of % on options trades all the time with this strategy. So you have to realize, what is high probability and what can get you the most bang for your buck, right? If you execute well. So anyways, that's how I did this trade. I entered on the pullback, took partial profits, and I'm still in a half position, waiting to see if we can push a little bit higher here up to my next target. I have one more example of where this happened on lows. This one's one where I actually entered on a close. Why? Because it didn't open the day above this trend line. It actually closed an hour above rather than opening straight above. So when I saw this candle close and I see the bullishness of lows, right? We've cleared this previous resistance level, right? And we're now sitting above it. And what are we doing? We're high basing. This is usually a bullish sign. It didn't work out quite as well as I would have liked it. But for a day trade, it was quite nice. It closed above, and in this case, you can enter a partial position after the close and maybe wait for a retest of the trend line and a bounce up to enter full. So I didn't quite enter a full position here, but I entered on the close, and I sold around the top. I didn't sell quite at the top. I was actually looking for some more. I was looking for up in this zone to sell, and when I saw that it wasn't quite going to make it, I sold right here, right? I'd like to do a trailing stop loss, and this is what you can do if your trade maybe is going very far. It's going a lot farther than you expected, and you're like, I don't know where to sell. You don't want to just sell on the first red candle, which is what a lot of people do. It's very emotion based. A really good rule, whatever time frame you're using, I like 10, 15, maybe 30-minute time frame for this strategy. Is as a stock's rallying, and right, you're collecting these profits, and you're like, I don't know where to sell. Maybe you don't really know how to find a target for it, whatever it is. Just take the last candle, on whatever time frame you're using. It works better on, like I said, 10, 15-minute time frames usually. And once a candle closes below the low of the last candle, that's where you take your trailing stop loss exit. So in that case, you would exit right there where this candle closes below the last candle's low. You can see as we go up, we're closing above the low of the last candle every time. And here we finally break down. So, I mean, you are going to miss out on a certain amount of profit. You know, you're going to miss out on 1/4% of profit. But that's how you have to treat trading, because nobody knows where it's going to stop, and you can't let it turn back to a loser. So you need to set rules in place like this to collect your profits. But hopefully you guys can see how these setups are. They're very consistent, guys, and they don't always lead to amazing winners, but many times they do. They're very strong flag breakouts, high base breakouts. Look for important levels that are closed daily and hourly above, and then enter on retests, right? And the more times, like in the Apple example, the more times that a level is tested and tested and tested, when it finally breaks, that move is usually going to be the best. So look for setups where it's very clean and it's been tested many, many times, and those will usually be the best breakouts and the most profits, right? And they're very consistent, because if someone has if a level has been tested 4, 5, 6 times and it's finally broken over, that just means more buyers are going to step on board, because more people can see that, right? And it's a way more important level. So once that's broken, it's off to the races. Okay. So yeah, hopefully this helped. If you guys have any more questions about how to use this strategy, maybe other patterns and stuff, I can maybe do some more videos on other patterns that I really like to play. But these flag breakouts and high base breakouts are two very good patterns to use, guys. So yeah, that's it. If you guys liked it, please leave a like and subscribe if you're not. And I hope you guys have a good day. Thanks for watching.